Hello friends, good afternoon. Welcome to today's video session of TaxTower.blog, the ultimate library of tax solutions. Today our topic is handled by Mr. Muhammad Mustafa CT. He is the CEO and Chief Consultant of BRQ Associates Kasaragod Kerala, India, which is the professional firm providing audit, tax, and advisory services. He have more than 20 years of experience in direct and indirect taxation and company law. Let us start today's service topic. Thank you, and over to Muhammad Mustafa CT, sir.
Hello friends. Welcome to our today topic GST Audit Para case study, non-payment of GST on other income. GST implication income other than sales/service receipt. As per GST Act, GST shall be levied on supplies of goods or services or both, except on the supply of alcohol used for human consumption, natural gas, petrol and its products, electricity. As defined in Section 7 of CGST, supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease or disposal made or agreed to be made for a consideration by a person in the course or furtherance of business. When getting any receipt/income other than sales or service, verify whether it shall be considered as supply as per GST Act or not. If yes, then need to pay GST as per GST laws on it. Below are the most common items which need to be considered. First one, rental income. Rental income from commercial property. Rental income from commercial property is supply and liable to GST. Rental income from residential property. Rental income from residential property is also supply and covered under GST, although the same has been exempted from GST. No GST on residential property taken on rent in personal capacity for use as a residence. In the 48th GST Council meeting, the Council clarified that no GST is payable where a residential dwelling is taken on rent by a registered person if the same is rented it in their personal capacity and for use as their own residence. This means that where a registered person is a proprietor of a proprietorship firm and they have taken on rent a residential property in their personal or own capacity and not that of the proprietorship, and the property is for use as their own residence, then no GST will be applicable. But if the residential property taken on rent for the business purpose of a registered person, have to pay GST on reverse charge basis. Second one, interest income. Interest income on credit cards, covered under supply, so GST shall be chargeable to it. Interest income includes interest income from bank saving account, bank FDR, NPS interest, NSC interest, post office deposits interest, PF interest, and any other interest income for any advance, deposit, debentures included in supply, so covered under GST, although the same has been exempted. Wide Notification Number 12 of 2017 of Central Tax dated 28 June 2017. Third one is income from partnership firm of any individual registered under GST. Salary from partnership firm, not covered under definition of supply in terms of Clause 1 of Schedule 3 of the CGST Act, 2017, so no GST is to be levied on the same. Share of profit from partnership firm, it is neither the receipt for goods nor for services. It is just application of money. So out of scope of GST. Interest on permanent capital from firm, it is covered under GST as service of advancing money in consideration of interest, but the same has been exempted under Number 12 of 2017 of Central Tax dated 28 June 2017. Fourth one, dividend income from shares and capital gain or loss on sale of shares or debentures. Securities are excluded from good or services in GST Act. GST Act refers the same meaning of securities as defined in Securities Contracts Regulation Act, 1956, which includes shares, scrips, stocks, bonds, derivative instruments. So any income, either dividend or capital gain or loss from securities, is not covered in supply. Hence not subject to GST Act. Fifth one, income out of maturity of insurance policies. Maturity amount received on maturity of insurance policy is mere receipt of money due to application of money which render it to be out of scope of GST. Although insurance premium payable liable to GST. Sixth, GST on discount received. Need to reverse the GST ITC if ITC taken while purchasing the good or services and seller of the goods also reduced his tax liability. If seller has not reduced his tax liability, then no need to reverse or pay the GST. 7th, any charges or fee collection from customer. These amount is to be considered as part of consideration of supplies made to customer or considered as separate supply, so in both the cases, we need to charge the GST on it. 8th, creditors written off income. ITC taken while purchasing the good, as per section 16 subsection 2 of CGST Act 2017, if payment is not made within 180 days, amount equal to the ITC needs to pay as outward tax liability. ITC not taken, there are two views. It can be treated as supply being activities of written off of amount for consideration of written off of liability, or the opposite view taken based it as a mere accounting entry without knowledge or consent of other party. 9th, sale of fixed assets. It is liable to GST as per the nature of fixed assets. Permanent transfer of business assets where ITC has been availed on such assets. Permanent transfer or sale of business assets on which input tax credit has been availed will also be treated as supply even if there is no consideration received. GST is applicable to the sale of business assets only. It does not apply to the sale of personal land or building and other personal assets. Permanent transfer means transfer without any intention of receiving the goods back. Goods sent on job work or goods sent for testing or certification will not qualify as supply as there is no permanent transfer. Donation of business assets or scrapping or disposal in any other manner other than as a sale for a consideration would also qualify as supply, where input tax credit has been claimed. So the above mentioned are some common items whose treatment under GST needs to be verified with due care while filing GST return. Further, the items which are falling under the scope of GST are considered as part of aggregate turnover, and rest of the items shall not be considered while calculating aggregate turnover in GST. Author's suggestion. If a registered business entity received other income, required verify whether it shall be considered as supply as per GST Act or not. If yes, then need to pay GST as per GST laws on it. Hence it is also advised to verify the books of accounts from January 7, 2017 onwards. If there any amount received as other income in that period, verify whether it shall be considered as supply as per GST Act or not. If yes, then need to pay GST as per GST laws through Form DRC 03, before issuance of notice by the department, along with interest at the rate of 18% per annum. Then he can escape from huge penalty from the department on account of not paid tax on other income received which attract GST on it. Thank you for listening. By BRQ Associates, Kasaragod, Kerala, India. In case if anybody you have any query or require more information, please feel free to read my blog in www.taxtower.blog. Or contact or WhatsApp me anytime in the number 9633181898, or the email ID brqgst@gmail.com.